Hello and a very good day from Frankfurt. My name is Thomas Kors. I'm in charge of financial institutions in the capital markets division at Helaba. And to the left here is my dear friend Susanne Knips, our senior banking analyst. Today we'd like to talk a little bit about the outlook for European banks for the rest of the year. In that respect, we have seen already quite some development. Profitability seems to be up, so that's all the rage. And Susanne has looked a little bit more into detail here. We have a report ready for you. We'll show you the link at the end of this little video, but we'd like to give you a brief summary here now. So Susanne, thanks for being here. What's the story of profitability? What are the key drivers for that development?
Yes, banks had a very strong year last year, much stronger than expected in the beginning of the year, when we were in the middle of the pandemic and everybody expected huge credit losses. But in the end, they didn't happen. So there was kind of economic recovery, and that helped very much. And also the market environment was quite strong.
But that's not something that we can necessarily completely just calculate for the future. So is this a strong trend now, or are we seeing a flash in the pan style thing that's just now but not for the future?
Yes, of course, 2021 was very much driven by the economic recovery. The new trend for the future will be net interest income, and probably rising net interest income. Even underlying net interest income should go up due to the fact that interest rates are rising currently, and that's good for banks.
Yeah, well, I'd say most people like rising income, but for interest, that's only one part of the equation. I understand that the makeup of income or revenues for banks has risen much stronger in other parts of the balance sheets than in the interest side. Can you tell us a little bit more about that?
Yes, that's true. During the time of low interest rates, of course, banks were watching out for other income factors, and they discovered net commission income, and
wow.
They did some efforts to improve their net commission income. So many banks have been quite successful.
I guess for Europeans that's a newish thing. Not for all Europeans, but for Germans especially, I would say. A lot to learn, but it looks like we're getting along the way quite nicely. But there's also, I understand, another type of income, but we get to that a little bit later. At least it was a factor. But lending, leading to rising interest rate income, has of course its downsides as well. So what about NPLs?
Yes, as I said...
I think you brought a slide with us, right?
Do we have the slide?
So, what does that tell us?
Yes, so as I said, NPA ratios have been very stable and they are still on historically low levels. However, we shouldn't ignore the risks, and one major risk I would point to is the fact that global indebtedness, of course, has risen over the time, and especially in the segment of the public sector, it's quite high now. So that's nothing which should be a problem this year, at least not based on the expectations of our economists. However, mid to long term, we shouldn't ignore the risks.
Well, you know, there's a famous economist that said in the long term we're all dead. But this is indeed a very long-term chart. This starts last century, right? So this is a 20-year chart. What looks quite nicely here is that the private sector has only risen by about 50%. This looks much worse in the public sector, but not so bad in the financial sector. Seems that the financial institutions have learned something. We're talking about banks here now, so banks look better now than they did before the crisis?
Yes, they do, and especially their equity capital bases have risen a lot. Last but not least, due to the increasing regulatory requirements.
Let's not talk about that. We have a little chapter at the end of this session as well.
Yeah,
okay, but so NPLs not a problem?
No, NPA ratios are really low and also stable. Of course, they may rise going forward, last but not least, due to the pandemic.
Okay.
But on the other hand side, banks have built up lots of reserves, loan loss reserves, already in the year 2020. And they still have over-provisioned, and we expect that they can even release some of those provisions
Isn't that
this
a pity?
year.
But I mentioned already in the beginning that there's another part of income that we've seen during the last couple of years originating from somewhere else. And I think we have a slide here on that as well.
I know what you mean. It's the TLTRO. It's the refinancing program the ECB is providing, and the banks can earn a nice margin on that, and of course all banks have taken as much as they could of those TLTROs.
Well, I understand that little bar here, because you would think that the Southern Europeans would be strongest takers, so Italy is here. France, to me, is a little bit surprising, because at least the French banks have always been extremely strong. Germany, third biggest? Can you give us a comment about that?
That's of course something to do with the size of the German economy and also the size of the German banking sector, and also the participation in the TLTRO was based on the lending volume of the banks, and German banks have huge lending volumes and managed to increase the lending, and then therefore they could participate in this
I
manner.
understand that German banks made quite a bit of money on the TLTRO once the shame of participating in it was disappeared. But we'll see what happens next, because I believe that's the end of it, right? No more TLTRO, so these special little windfall profits won't come back over the foreseeable future, correct?
That's true. The nice margin is going to end in June this year. However, as I said, hopefully underlying net interest income will increase due to rising interest rates.
So in that respect, these extra profits won't be missed. There will be other profits to make up for that. Wonderful, but profits are one side, costs are another. One of the reasons behind the sort of beneficial development of banks, you mentioned before, stronger capitalization, bigger reserves, that's regulation. But regulation has its costs. And everybody was moaning about the Basel regulation that costs so much money, compliance departments, processes, IT infrastructure, and so on. But there's a new elephant now in the room that costs even more. And that does not just affect banks, affects everybody, ESG. So what is your take on that? Isn't that going to reduce the profitability of banks strongly? Or
Yes,
are there
of course.
chances?
Yes, of course. There are also chances, because it's also a huge potential for new business. But of course, there are also huge costs related to this, especially in terms of data and managing data. And also, as the regulators say, there are also financial risks related to the transformation of the economy into a more
Energy neutral.
Climate neutral.
Climate neutral. That's the word. There is so much new vocabulary coming up with ESG that we need a little glossary every now and then. But okay, so you're saying that's on track, but where do we stand right now? If I look at that chart that you brought, there's still a lot of work to be done, right?
Yeah, that's true. There are expectations of the regulator how banks should handle those risks, and they are still in the beginning of
so
really
we want to be
ESG
here,
risk.
right? But
Exactly.
a lot of people are still down here.
Yeah, exactly.
Okay, so somewhat inadequate certainly sounds better than inadequate. But okay, I guess judging from our own efforts as an institution, everybody is very committed to these things, and we're all developing wonderful possibilities to not only save the climate, but also save our profitability. So that's great news. More of this in the report in more detail. Let me just quickly summarize. In general, we think European banking profits are finally on the right directionary path. We see a stable rating trend, probably not many downgrades to be expected. One could say, of course, that the tide lifts all boats, but we think there are strong boats here. There's a caveat, and this is where the tide may become interesting. Indebtedness is rising on a global level, not so much on the private household side, very strongly though on the public sector household side. There's of course the big booster effect. Everybody talks about boosters these days. We wait for boosters from the central bank in the fact of interest rate increases. They're all pretty much already priced in. We'll see what happens. In that respect, again, look at the detailed report that Susanne has prepared. There are lots of links to other reports of Hellerber. Thank you very much for joining us on this little video here. My name is Thomas Kors. This is Susanne Knips. Thank you very much, and we hope to see you soon again. Bye-bye.
Bye.